Hey traders, welcome back to your new video tutorial. In this tutorial, I'm going to go through the 3 different entry types that I'm using in my current strategy that have given me a 78.38% win rate. And I've even passed Ascendix Capital Phase 1 200k funded challenge with a 100% win rate. So let's stop messing about, let's get into the video. All right, so first things first, okay, the way that gold moves is very simple, okay? Price will accumulate, okay? It will break out, reaccumulate, break out. Sometimes it will retest, not every time. Sometimes it will retest, and then it will move again, and then it will accumulate again before it either moves and continues in a bullish trend or reverses, okay? Now, the problem is that so many people try to catch the breakout and do it wrong. Some people try to trade the reversal, which they also get wrong because they see price moving down so sharply from here, they start to sell, only for price to reverse and take them out very quickly. The other thing is that they don't know where to get in when price reverses and pulls back. So in the next 3 stages of this video, I'm going to go through 3 different entry types that are going to give you, if you practice, very high win rate and more confidence in entering these trades based on accumulation, breakouts, retests, and candlestick anatomy. Okay, so first of all, if you pay attention to the breakdown video that I send every day in Discord, you'll notice that I identify the accumulation. All right, now once I've identified the accumulation, I'll be drawing a blue line basically off the beginning of the accumulation, right? So once I've identified this accumulation, I'll be marking the low and the high of this candle, okay? Sometimes it will be slightly higher because we'll get another maybe higher break and then another downwards facing candle, okay? So I'll move the accumulation a little bit higher. So I'll identify the accumulation and I'll wait, okay? Because trading inside this accumulation can be quite risky. There is an entry method that I'm going to go through that allows you to get in during high volume periods of the day that will allow you to get in at a better price and catch maybe a slightly larger take profit, and you can bank more reward basically. But in terms of identifying the accumulation, so number 1, if you watch my breakdown videos every day in Discord, you'll get the hang of it a lot quicker because I'll be breaking down why I'm identifying this as an accumulation and why it's bullish and why it's bearish. But to identify the accumulation, you're basically looking for a series of sideways candles that are not going anywhere. You want to mark the high and the low of it. As I said, sometimes you'll get a higher close here and then a downwards facing candle from a little higher up. So just mark it a little bit higher. And then we want to be marking off the downwards facing candle that's the highest point basically, right? Because this is the area that generally you could potentially place limit orders if the market is working in your favor, okay? So we identify the accumulation here and then we draw just I used to use a trend line and I just drag that across my screen towards the end of the day, and that's me set up for the day. From there on, I'm looking for 3 different entry types that will allow me to trade gold with a 1-to-1, 1-to-2 or 1-to-3 risk reward ratio. Okay, so the first entry method that I'll use will be from within the range, okay? And again, it's very important that you're actually trading this inside a high volume period of the day. So London, Frankfurt, 6 a.m. pre-London open also works. Maybe New York, 1-2 o'clock, it works again, but during London is probably the best time to catch the low of the day if we're in a bullish trend. Now, what you'll identify here is obviously we've got this area where price will fail to close below. Okay, so that's the first thing that you'll notice. We've got this accumulation, and maybe Frankfurt will open here and it will move up. 8 o'clock, London will generally pull back. Okay, that happens 9 times out of 10 in this market, you'll get a move up in Frankfurt, and you get a move down in London, and then around about 9 o'clock in the morning, you start to see price slow down at the bottom of this accumulation. Now, what you'll generally identify is that this candle here will take the low of maybe the Asia session. It doesn't matter if it's the Asia session low or not. It's the accumulation that's more important. Okay, so you may have had, you know, a pretty big move up in Asia, and then price towards the end of the Asia session maybe starts to reaccumulate. We're looking for price to give us a signal that it wants to move up. So Frankfurt open, London will generally come back down and just take the lows of Frankfurt, and then what we'll have is we'll start to get volume coming out of the market because the selling process has ended. They've taken the liquidity from the low, and then we just need to pay attention to the candles and the wicks of the candles. And if you've watched any of my previous videos on advanced candlestick anatomy, you'll find this entry method is very, very simple, and it works 9 times out of 10. So we see that we've got the low formed here. We've then got a new lower low, but then on the next 1 hour candle, we'll get a higher low on the wicks. And if you follow the upper wicks, we've got a high, and then a lower high, and a lower high. But this candle here actually breaks above the previous candle wick. So what have we got? If we've got a lower high, and a lower high, but we break the lower high, and we've failed to break the low of the previous candle, we've now got a new higher low and a new higher high. Okay, so where do you think the market is going to go from here? Do you think it's going to go up, or do you think it's going to go down? Well, 99% of the time it's going to go up. If it's broken the high and failed to break the low, it's 9 times out of 10, 99% possibility it's going to move up. Okay, and even if it only moves up to the high of the accumulation or the range, it's still moving up. Okay, so we place our entry here, okay, above the high of the previous candle, and we place a stop loss down here. Now, a good size stop loss for gold based on law of averages is 50 pips. If I'm going to take a trade with a 50 pip stop loss and gold hits my stop loss, I know that I am very, very wrong. 50 pips on gold in either direction, if you're wrong, 50 pips means you're completely wrong. So I like to use a 50 pip stop loss because I know that I've got a lot higher chance of allowing that trade to breathe, and also I've got a higher chance of winning my trade. Okay, so we've got the high broken. Okay, we've got a new low formed. We take our entry on the break of the high because we've got support created in the form of this upwards facing candle. If this was bearish, it's not such a great idea, but if it's bullish facing, then there's a very high chance when this candlestick opens, okay, when it opens, it's not going to move up and then come down and form the wick. Okay, it's going to move down first, and then it's going to turn bullish, then it will break the high, then it will move up. Okay, so it works in a 3-stage process. If you look back at any of my candlestick anatomy videos or any of the videos in my playlist, you'll see that I go through this quite thoroughly, so I won't go on about it too much now. So we enter off the bottom of the range because number one, price has failed to break and close outside the range at the bottom. Okay, we're rejecting. Maybe we're taking liquidity, maybe we haven't. That's irrelevant in my opinion. But we come down, we form support, we create a new low, we create a new high, price moves up, and then hopefully during high period volume period of the day, there's enough volume to take us maybe 150 pips to a 3-hour trade. Okay, so entry model number 2 is quite simply a breakout trade. Okay, maybe we've witnessed that this is, you know, now reversing off the bottom of the range, and we've missed our entry here. Pointless trying to jump in here because we haven't broken out the range here, the accumulation. We haven't broken out of it yet. Okay, because what could potentially happen is that we move back down and reverse off the top of the range, and for some strange reason, price decides that it wants to move down. Okay, gold will do whatever it wants. It won't always move favorably in your direction. Sometimes it will just completely flip on you for no apparent reason. So if we're taking the first entry, number one is once we get up to this point here, which will probably be around about 1 hour, you're looking to move your stops to break even. Okay, that's it. Okay, and if it hits break even, so be it. Now the second entry is we need to have a closure outside of the range. Okay, it's pointless trying to take a trade from here because you don't know if price is gonna just completely flip. It's taken liquidity from the low, hasn't taken liquidity from the top. Maybe it just flips on you and it kind of does that and then just slams down out of the bottom of your stop loss, and yeah, you're left with no profits and a loss for the day. Okay, so in the terms of taking the breakout, we need to identify, number one, a 30-minute closure outside the range. 30-minute and above. 50-minute is no good. It has to be a 30-minute candle that closes outside of the range. Okay, now the next thing that we're looking for, okay, is for the next candle to open, we want it to move down first. Okay, it's very important that it moves down first. It has to move down first because based on candlestick anatomy, which again you can go through in the rest of my course, the candle will move opposite direction to what it's going to move and close by the time it gets to the end of the candle, right? So if it's a 30-minute candle, it'll move down first, move bullish, pull back, form the wick. Okay, so it'll form the bottom wick first, okay, then it will form the upper wick, then it will close. Okay, so in this entry method, it generally has a lower risk reward. Okay, maybe you're looking for a 1-to-1, maybe 1-to-1.3, 1-to-1.5, but anything more than that, you really need to start considering that you need to bank your profits, because ultimately, if it doesn't just take off and fly, 2-3 hour, which generally you're probably looking at, price by the time it gets here, it's probably moved about 60-70 pips. Okay, you're asking it to do another 150, which generally is not going to happen, right? So in terms of a breakout trade, we need to be securing profits at around about 1 hour, so we can have our entry on the break of the high. A more aggressive entry would be on the break of the, once this candle comes down, we form the wick, we move up. Once it goes bullish, you could then take a more aggressive entry. Okay, and then as I said, once we've broken this high, that's an extra confirmation. You're looking to come out the trade with maybe a 1-to-1, 1-to-2 is not always possible, but anywhere between 1-to-1 and 1-to-2. Okay, now for your stop loss, you have a couple of different variations. Okay, you could go with just a normal 50 pip stop loss. So if we were entering here, okay, 50 pip stop loss maybe down here. If you can cover the majority of, maybe the last two candles, that's great. Most aggressive stop loss would be behind the low of the previous 30-minute candle or 1 hour candle if you're trading on 1 hour. The most safest entry would be the bottom of the range, okay, because even if you wanted to take this as an intraday swing, you could wait for price to come up and then come back down and retest and move up, and just your stop loss should be okay, because the idea behind an accumulation is that there's a lot of orders placed in here, and when price moves up, okay, it comes back down, it retests, there's orders inside this accumulation that protect the big players' trades from moving against them. They'll place more orders here to get more orders, right? So they'll know that people are trading a breakout, they'll know that break-evens are around about here, they'll know there's entries around about here, and when they move up, come back down, and what they'll do is they'll exchange your orders for theirs. Okay, so if you want to swing this kind of setup, then again, you don't have too much of an issue as long as your stop losses are below this level here, which would also then give you a stop loss below the low of the day. Okay, so just to recap on the breakout, wait for a closure, 30-minute or above, nothing under. 30-minute or 1 hour has to be above and outside the range. We wait for the next candle to open. We wait for it to come down first. Sometimes you'll see it just ping off the top of the range here. If it breaks the low of the previous candle, there is no trade. Okay, so that's number one that you need to look out for. If it breaks the low of the previous candle, there is no trade. So we wait for it to come down, respect the low of the previous candle. As it moves bullish, that's when it becomes a high probability trade. Okay, high probability breakout. When it moves, you can take your profit 1 to 1, 1 to 2 points, maybe 1 to 1.5 max, and you come out the trade, and that's it. Okay, so the third entry method here is the break and retest method. Okay, this I know is the one probably with the highest success rate. This is the method I used to pass my 200k challenge with a 100% win rate, and this is pretty much it can happen during London, and it can happen once the London and New York crossover sort of happens. You can wait for the pullback entry around about that time. Now there is a case for using a limit order. Again, you can use this blue line, okay, because I've identified this blue line, number one. Okay, number two, we have to use a fib level. Okay, so our fib level will be placed from the low of the breakout, okay, and then up to the top of the breakout. When the breakout starts to turn around and the candles change color, you need to be looking to place your fib at the top and place your fib at the bottom. So we place a fib at the low on the day, okay, low of the accumulation. We wait for the breakout to occur, and then we place our fib at the top once price starts pulling back, and that will give us hopefully a level of 61.8, which was in line with the top of the breakout. Okay, now the amount of times that this actually lines up is unbelievable. Okay, the more times I watch it, the more trades I take using this method, the more times the 61.8 level would just line up, maybe just above it, maybe right in line with it, and sometimes just maybe below it. Okay, but we've also got the 50%, 61.8%, and the 78.6% retracement, all in the same area of the accumulation. Okay, so entry number one, okay, is that you simply just place a limit order here with a 50 pip stop loss and 150 pip take profit, and you let the trade do its thing. That's entry number one. Okay, that's the simplest way to do it. Personally, I prefer to monitor price action, and I like to see it, you know, slow down, where I see the candles, you know, we've got quite big candles coming down into the accumulation, so retesting into the accumulation, and the candles just start to slow down, and you can pay that attention on the 15-minute, a 30-minute, and maybe even the 1 hour. Okay, it all depends on how much volume has been traded in the market. There's a lot of different kind of aspects as to how you could trade this. You could go down to the 1 minute, 3 minute, 5 minute, but for me, you know, 15-minute, 30-minute, 1 hour, that's where there's so much more value, and you can get so much more confidence in getting that winning trade, as opposed to trying to read the 1 minute, which can be very, very difficult. You need a lot of experience to be able to trade the 1 minute profitably, consistently. Okay, so number one, okay, if we just go back to the start, we've got the accumulation, right? So we're looking for the accumulation, sideways price action. Sometimes the accumulation would be a bit bigger, sometimes it would be a little bit smaller, but we're looking for an accumulation on the 1 hour time frame. Okay, nothing below 1 hour time frame. Once we've got our accumulation, we then mark off this high, okay, So sometimes it will be here, sometimes it will be a little bit higher. Again, it all depends on where that downwards facing candle is in terms of the accumulation or the beginning of the accumulation. All right. If we've missed trade number 1, we've missed trade number 2, we need to wait for a retest on the accumulation. Now, me personally, at the minute, I'm allowing, the majority of the time, I'm allowing the breakout to occur. I'm also allowing this to happen. Okay, so we're waiting for the first trade. Okay, we ignore that. Normally it's around about 6 o'clock in the morning. It's a little bit too early for me anyway. Sometimes the breakout's not as convincing as you may think, because you may be getting in around about the wrong time. Sometimes Frankfurt will close outside and then close back in, so you need to wait again for this retest, because London will generally pull back every single day. So we wait for the breakout, we wait for it to move up, wait for price to turn around. Okay, then we mark the high of our fib and the low of our fib, and in an ideal world we've got that lined up with a 61.8% retracement level. Wait for price to come down, and this doesn't matter what time of day it is. People say don't trade from 11 o'clock to 1 o'clock because it's low volume, don't trade at 12 o'clock because it's New York pre-market, don't trade at 2 o'clock on the opening bell, or whatever else. Just trade this when it happens. Okay, it doesn't matter when it's happened, because for me, a lot of social media will tell you that time and price, all that crap, but for me it's all based on price. Okay, if gold is expensive, you sell it. If gold is cheap, you buy it. Okay, there'll be orders placed in the market which don't have a time limit on them. They'll want to buy at this price regardless of time. Okay, so when we come back down into this level, you have two options. One, place a limit order, put a 50 pip stop loss on it, and 150 pip take profit, and aim for 3 to 1. Okay, aim for 3 to 1. If you get it, great. If you don't, manage your trade properly. If you think that it's going to reverse on you, take your profits or start trailing the 30-minute time, the 30-minute candles up. Okay, the alternative is that we do the same as what we've done down here, right? We identify support. Okay, so support is identified by not a, if we're bearish, it's not identified by another bearish facing candle, it's identified by a bullish facing candle. Okay, so we move down, we've got support created in the form of a bullish facing candle. Then what are we looking for? Exactly the same as what happened over here. We're waiting for the next candle to open. Okay, wait for price to come down, form the wick, but also respect the low. Okay, then you'll notice that we've got this V-shape reversal. Okay, the V-shaped reversal, which you'll learn to identify in the 30-minute and above. You won't be able to unsee it once you've seen it. Okay, we've also got the same process here. We've got a V-shaped reversal. Okay, once we get that, we then we wait for the candle to come down. As price moves in our favor, moves bullish, and it passes the high, most of the time the high of the wick. Sometimes if you've got a really long wick, you need to enter on the break of the candle body high, and then price should again move in our favor. Now this gives a better risk reward than any of the other two examples that I've seen shown you. Okay, because this would generally give a 2 to 1. A breakout will give probably, I don't know, 1 to 1, 1 to 1.3, 1 to 1.5. This will generally give you, once we've waited for the retest, it's also like a confirmation that, okay, we've accumulated, we've broke out, we've come down, we've accumulated more orders. So we've got orders here, price come back down, oh, let's buy some more, and then price moves up. And that's where you get the more impulsive moves that actually go and move 150 pips in 3 hours. Generally, they'll happen very quickly because you've got, throughout the day, you've got Asia, okay, which will obviously, they'll be buying. You've got the buys coming off the bottom of the accumulation. Then you've got London, which will buy some more. Then you've got like a pre-market drop off where, a lot of orders are being closed. Price starts to pull back because obviously it's gone from cheap to expensive, and when it's expensive you sell. When it comes back down to the cheap prices, okay, it's going to move again. So this will generally be the bigger move throughout the day. So you've got move 1 around about 2R, breakout around about 1 to 1, and then the retest entry, okay, is where we've broken out, we've come back down to this blue line, okay. This blue line is significant because it's the high of the accumulation, okay. We've got our fib level marked. We want to be looking at 50%, 61.8%, and the 78.6% level, and then we're looking for a reversal here. So you've got two phases. You can either place a limit order and trust your analysis, okay, or you can just simply use candlestick anatomy and trade a reversal, which you'll again see multiple videos on this in my YouTube playlist, okay. So go and take a look at your charts, guys. Back test it as much as you can, okay. I back tested this and it had, I think, about 72% win rate. It works very well. And when I traded it live on a 200k challenge, I actually got 100% win rate, which just blew my mind. So moving forward, you'll see this every single day in my Discord channel. If you're in Greg's analysis room, I'll post a video in the morning, and then when the trade becomes live or when price comes back to our level, you'll all be notified as usual, but you've got more information to go by now, and hopefully this video will teach you the mechanics of how to enter it properly, efficiently, and very profitably. Okay, so it's all well and good me sitting here on YouTube saying this is a winning strategy. This strategy has 70% win rate, 80% win rate, 100% win rate. Unless I show you some actual results, it's going to be very difficult to believe. So I'm going to show you the last 4 accounts that I've traded since August. Okay, I've been trading this strategy since August. I was back testing prior to that. So let's take a look. Number 1 at the 200k challenge that I did. Okay, now if we hover over here, you can see that I've had 100% winning deals. Okay, there's 9 trades, 9 wins, 0 losses. Okay, there's $14,000 in profit, okay, which passes phase 1 on Ascendix Capital phase 1, 100% profitable. Okay, and if we come down the table here a little bit, you can see total deals with 9 wins, 7 long, 2 short. Now the next challenge that I did was in September, and that was a 100k challenge. Again, I did have 3 losing deals on this account. Okay, we're 7 wins, 3 losses, but that still gave me a profit factor of 2.65, which is really high, and we've got 70% win rate. Okay, so we had 10 trades all in all, 7 wins, we had 3 losses, and we had 2 long trades, 5 short. Okay, the next one is a 50k account, which was August and September. Okay, now I did have a total of 5 losing deals, okay, in August. That's probably when I started off trading this strategy. It's still working out some of the kinks, but nonetheless, there's still 5 losing deals and 8 wins. Okay, we had a 68.75% win rate. Okay, profit factor's down a little, obviously, because I took a couple of losses. So we had 16 trades all in all from August all the way through to September. 7 long, 4 short. We had 5 losing deals. Okay, the next account is one that I've only just started, so we've only taken 2 trades, but we've had 2 wins. Okay, one of the trades here was more of a break even. I moved my stop loss to about 3 or 4 pips in profit, so you could say it's 1 trade in, but nonetheless, over the total amount of trades, if you do the calculations on this part of the video, I took 37 trades. Okay, 21 wins and 8 losses. Now that gives me a win rate of 78.38%, which is very, very high when it comes to trading forex.